Hello traders and welcome to my 100th video. So yeah, I'm just as surprised as you guys are. This is video number 100. I think what better way to celebrate it than new order flow visualization. Yeah, so this was my Patreon suggested video as you can see here. And alongside it being the 100th video, my special announcement is that I'm currently creating a Fibonacci master guide. So that includes how to draw Fibonacci's, how to draw Fibonacci extensions, retracements, support resistance using them in conjunction with fibs, how to use volume with fibs, and so on. That was requested by many people for me to try to make a guide like that, just to try to help out. And it also has a lot of interactive examples as well. So I think that, yeah, so I'm looking forward to that. That should be out within, I'd say, a week, anywhere from like 2 weeks to a month from now. All right, so at first look at this site, it's probably looking kind of ugly and crazy because I know this might seem like a lot of information, and I completely understand. When I first came across this site, I felt the same way. I felt like this was just way too much all at once. What I'm going to try to do in this video is to do two things. I want to break this down. I want to break this site down into simpler components. And the second thing is I'm going to leave you guys with just a simple strategy that you can use just as a simple gauge to know when to buy and when to sell. So to start off with what this site is and what each of these components represent. So this site is tensorcharts.com, link in description. And this site's going to be, this site uses order flow visualization. So it uses volume and order flow and the order book to give you a lot of different metrics. Now let's start with what these metrics are. So you can draw, of course, with these time frames, any coin that you want on a lot of exchanges like Bitfinex and GDAX and so on. We have price and volume here, but this is not going to be your typical everyday price and volume chart. What we have here is also this blue line. This represents large orders in the market. So whenever you see a blue line like here, or blue line here, that represents a likely resistance or support level because there are a lot of orders at those levels. Now, whenever you see a blue level that never got filled, you see here, price never went down here, but it was canceled. That could show you actual spoofing in the market. So spoofing occurs, for those who don't know, when there are bots who will place artificial buy and sell orders. I call them artificial because they're not meant to ever be filled. They're just meant to artificially create demand, supply and demand. So these orders were placed here potentially to artificially create demand for the market for it to make one less leg. And then you can see here, selling, and then the market went down. But some orders are genuine, like this order was genuine. It popped up right there and then caused support. But typically, more often than not, when you're looking at these kinds of orders, actual orders that become support or resistance typically aren't going to be shown on the chart. That's because the smarter traders who have a lot of capital are going to want to hide their orders. Because if a trader puts a sell order at 12K and he lets everyone know around him, hey, I'm selling at 12K, what's going to happen? I'm going to sell at $1 below 12K, and I'm going to get filled before he does because I know he has a lot of capital he's going to unload. And the guy next to me is going to say, all right, I'm going to sell $1 below you do because I know there's a lot of capital at that level. That's why typically when you see these blue lines, they're not actually going to become support and resistance unless they pop up right before price touches them. And when those big orders pop up right before price touches them, that right there, that is when you're going to get that powerful resistance or support. Okay, so that's just how you use those blue lines to notice cancellations and spoofing and strong and weak orders. But typically, more often than not, when you see that there aren't that many orders being placed, like here there's a lot of blank space, you can expect the price is probably to climb down. But when you see that there are a lot of orders being placed like in a different direction, typically price isn't going to move in that direction. So that's just a quick gauge for what you can see with that. One more thing that you might notice is that within each candlestick we have green and red. This is the buying and selling volume distribution within each candlestick. Whenever someone buys or sells, it will be reported as green, buying, red, selling. The brighter the green, the higher the amount of volume bought at that level. The brighter the red, the higher amount of sell volume at that level. So what we can see here is it's not only on price, but it's also on volume. So if we see with this volume here, a lot of people sold, no one bought. Or we can see here, really every single person had sold here. Very, very few people had bought. Like Like no one bought there, no one bought there, just all selling. Here, everyone bought, no one sold. And that became a market top, that became a market bottom, because when everyone sells, price goes up. When everyone buys, price typically goes down. So yeah, so you can see those really good distributions there of just buying and selling volume. To make it simpler, you can hit delta as well. Delta is just going to tell you buy volume minus sell volume, or sell volume minus buy volume. So same thing with the brightness. The brighter something is, the more volume transacted at that price level within the candlestick. But the good thing about delta is it's just a lot simpler. So I can see here that this was just all buying. This here was just all basically selling. This here was basically all just selling as well. But volume, what's going to happen is the more faint that volume is, the less dominant that volume was. And the brighter that volume is, the more dominant it was. So what I mean by dominant, this is a very bright green candle because it was basically all buying. This is a very bright red candle because it was basically all selling. This is kind of a faint candle right there, right, as you can see. It's faint for most of it and kind of bright. That's because it was just about equal. That candle there had just about equal buyers and sellers. So it's not really clear who won the battle in those 5 minutes, the bears or the bulls. Yeah, one last thing you might notice about price and volume. This is not your typical volume chart because you may notice that, yes, there's red volume even when price is going up. And there's green volume even when price is going down. What does that mean? Notice here, let me actually give a better example. I think there's one over here. Yep. Notice here, price clearly goes up, makes a tail, it closes higher than it opens. Volume is red. When volume's red, that means more people sold in that period than bought. As you can see here, the price went up, but still, there was more selling that was done here than was actual buying. And what occurred in the market is the price went down because some people were selling, but the price went up. So then the market had to correct that. And that's going to happen for some red candlesticks as well. So you might see like a green volume candlestick, even though the price candlestick itself is red, and the reverse. Okay, so the ask and the bid, just your standard ask and the bid. What you'd see if you've seen my order book videos, you know what the ask and the bid is. This is a bit different. This will tell you how many Bitcoin were bought or sold at every single price level in the past. So we know that at 11,150, 40 Bitcoin were bought, 42 were sold. This is very helpful. So this goes a little bit further and also tells you how many Bitcoin were bought and sold at different price levels. And as I scroll up and down, you can also see that overlaid onto the chart there. So we'd expect that 11,150 will become some pretty good resistance. And coincidentally, that price is right at resistance right there. So that level is going to probably cause some pullback when market goes up to there. And you can just scout for other levels where a lot of Bitcoin were bought or sold. We have a book counter down here. Hit start to see basically just the pressure. This is order pressure. So when this is very high, that means that there are a lot more sell orders than there are buy orders. We would expect that price would likely move down. If this is high, like this green number is higher than that red number, and this would be like there are more limit buy orders than there are sell orders, meaning that there's likely more demand than supply in the market, meaning that price is more likely to move up than it is to move down, and vice versa. I don't like to leave that on for a long time because I like to recalculate it every minute or two. You can just hit spacebar to start or stop it. And finally, and this right here is my favorite right there. I'm going to talk about that. We have a volume tick chart. Exactly what it sounds like. It shows you those large transactions that occurred, also the smaller ones, and buying and selling. We just have amount and price level for every single transaction, typical stuff. And then we have the trades counter, and that corresponds to that. I would say that 70% of how I use this site just has to do with this. And this is going to be the main strategy for today. One last thing before we get into the beauty of exactly what this is. You can also get a free volume profile on this. Hit V, and you can get the volume profile for any level you want. I did some videos on how to use that. And if you don't want to buy TradingView Pro, you can just use this instead. As you can see, it calculates very, very quickly. As you can see there, it's calculating within, I think, milliseconds. So it's really nice. Also, they offer EMAs, SMAs, volume weighted average pricing, Then support resistance levels, which is kind of cool. If I hit like that, I can get free support resistance levels, support and resistance levels like here. And they're calculated based on volume. So wherever the largest amount of traded volume is, it's going to tell me where that is. So very, very helpful tool right there. I know that this is going to be resistance and support. And this already kind of looks like support and resistance too. So very good indicator. Okay, so let's get into the strategy part. The trades counter is going to tell you in the given interval you pick the amount of buying and selling that had occurred. So what I have here is in the last 5 minutes, my interval, 6 Bitcoin were bought, 7 were sold. 66 market orders were used, 56 now, to buy, because remember this is the last 5 minutes, that's why it's going down. 56 were used to buy, 45 market orders were used to sell. In the last 20 minutes, 45 were used to buy, 45 Bitcoin were bought, 60 were sold, 452 market orders used to buy, 523 market orders used to sell. And these are all the market orders. Each transaction is represented there. You may notice, why do you have a 5 and a 20 here as well? Why'd you repeat that? The reason I did that was to separate the two different kinds of market participants. These two, this 5 and this 20, represents all transactions that occur under 1 Bitcoin per transaction. This is going to represent just the smaller crowd. What are they doing? This right here is going to represent the larger crowd. Any transactions that's occurring above 1 Bitcoin. So this way I can see, here, 27, with the larger traders, the larger retail traders, they've sold 27 Bitcoin, haven't bought any. The larger retail traders in the last 20 minutes have sold 69 and only bought 48, as you can see here. I also have a 60, as you can see here. So this just tells me in the last hour how many Bitcoin were bought and sold. The reason I have multiple 60s is just to make this brighter. I'm using this overlay, so if only I only had one 60, it's kind of dark and not helpful. If I have multiple, it's a little bit brighter. And that's a perfect segue into what this is. So this is the 60. I overlaid you can overlay any of these onto it. Right? I would not recommend overlaying the 5 minutes. It's kind of useless because, the higher that green is, the more buying that occurred relative to selling, lower the red is. But you can already see that on the price candlestick, and you can already see that on the volume candlestick. I don't really know why one would want to use it on there, but I mean, if you want to, go ahead. That's fine. I find it a lot more helpful to look at the 1 hour. With that 1 hour, what does that tell us? The 1 hour will turn green whenever in the last hour there has been more buying than selling. It will turn red whenever there has been more selling than buying in the last hour, based on the amount of Bitcoin being transacted. One thing you can use with this is when it gets very, very high up, like you see here relative to that, we had very high green values. That means that there was a lot more buying relative to selling in the past hour, which is indicating a market top, typically. A lot of buying had occurred here, market top, and if I keep scrolling right here, see where everyone bought, market top. And then price goes down to consolidate. Same with red. If everyone's selling in in the past hour, that red gets very, very small. Like the 60 gets very, very small down to like there. That's probably market bottom. So that's really how you'd use that. Yeah, so we've gone over filters. So the filter of just filtering out smaller volume, the smaller guys versus the big guys here. How do you use this? Well, the 60-minute you don't really need to look at because you can see it here. So that's why I only look at the 520, 520 with small and big guys, small retail traders, big retail traders, and the 1 hour. What we want to do is the opposite of what everyone else is doing. So let me tell you guys exactly how to do that. Because I want to leave you guys with a strategy that you can actually use. Because I know this can look kind of complicated and like wonky and all these numbers here and so much hitting you all at once, so much stimulation. Let's make it a bit simpler. Order flow visualization. So to start off with, I want you guys to just focus on two things: price and the trade counter. Price went up. I think you guys can agree after a volume spike, right? Volume spike occurs, price goes up. What's going on here? In the 5 minutes, a lot of the smaller retail traders have bought. In the last 20 minutes, a lot of those smaller retail traders have bought as well. In the last 5 minutes, the larger retail traders have I'd say 90% bought. Last 20 minutes, a lot of them have bought as well. Do we want to buy or sell here? We do not want to buy here. This is a horrible, horrible spot to buy. We need to sell. This looks terrible. This many people buying it. What happens to the price? It goes down. I actually wanted to buy this. I'm not gonna lie. I saw a volume spike and decent bullish volume moving upward on high momentum, and I was looking for a spot to buy. I didn't buy this because I saw everyone already bought it, and demand was too high. I want to buy when demand is low and beginning to rise. So what's happening here? Demand is low and beginning to rise. We can see here that 27 relative to 18 have sold in the last 5 minutes. The smaller 20 minutes, 89 to 63. Twice as many of the larger retail traders have sold than bought, 24 to 12. And I'd say about 75% of, in the last 20 minutes, of the larger retail traders have sold than bought. Price goes up, as you can see there. Prices here, again, a lot of people are buying, both the smaller guys and the larger guys, and you can probably guess what happens to the price. All right, let's go to a new example. A little bit farther out so that you can maybe trade this with a little bit more long-term time frame. Let's look at one more additional thing. First of all, price action volume, and then we're going to talk about this. Price action volume, well, what do I see? Volume spike had occurred here, price goes up and down and then goes here. High volume here. Previous support that will likely become future resistance. So this is telling me this is probably a little bit bearish. This is also probably a 61.8 retracement, or coming close to a 61.8 retracement. Yeah. If we look at the book counter, remember that's just this. If we look at the book counter, we can see that a lot more selling. There's a lot more supply than there is demand. 186 want to be sold, and 74.7 want to be bought. One argument you might have is, wait a second. A lot of people want to buy down here, but that's not represented here. I agree. But if the market was bullish and if demand was really high, these guys wouldn't be putting their buy orders down there. They'd be putting them here. They'd want to get filled immediately because this is so bullish. If these larger traders believe that the market wasn't bullish, they'd probably want to put their larger orders down here, right? Because it'd be stupid to put them here because they'll just get filled and they'll lose money. So that's why that all of these larger sell orders were actually down near price. Not many buy orders near price here. Beyond that, and this is probably the biggest reason why the market does, you can probably guess, go down. So many people have bought. Okay, 51 Bitcoin have been bought in the last 5 minutes relative to 10 Bitcoin with a smaller retail trader crowd. Let's take the last 20 minutes. That's like here to here, 20 minutes. 102 to 65. Let's look at the bigger guys. In the last 5 minutes, 92 Bitcoin have been bought. 3 have been sold. 153 in the last 20 minutes, and not many from the larger retail crowd have been sold. So what does price do at 8:30 Eastern time? That's 20:30 for those who know military math. All right, let's go to 8:30 at night. Yep, that's here, 20:30. So you recognize that structure right there. That's the same exact thing as this, right? It's the same exact thing. The market actually did not go an ounce higher. That was the highest level it would go in the next, I think, 2 hours. So market went down, back up, and then went back down again to a lower level. This looks like great momentum. This looks like great volume with a volume spike. Would have been a terrible spot to buy. This would have been not a disaster, but a loss of money and really not good trading. And this is why. Right there. And standard volume chart would not have told you to sold here. This is not a major volume spike. All that this is really important for is previous support becoming future resistance. But that's why this site comes into help to be very, very helpful, because it's telling you that information that most people don't have, or if they do have it, they don't know how to use it. And this is how we can take advantage of those retail traders who are relying on their emotions. Okay, let's look here. Price action and volume. We have a volume spike here, right? Minor volume spike, but still a volume spike. Price goes down on weak volume. Yep, it's very faint, meaning that buying and selling is just about equal. Price goes down to previous resistance at 10.915. That could become future support. We have a slightly more bullish order book. Only 50 Bitcoin to sell at relative prices and 65 to buy. Good, bullish. A lot of people have sold here. Not a lot, but a good amount. A good amount of the retail trader crowd has sold recently in the 5 and the 20. 5 minutes, just about equal. I mean, for the larger guys, the guys with more capital above 1 Bitcoin, and past 20 minutes for the guys who trade with more than 1 Bitcoin, just about equal. That was the beginning of the uptrend this morning. Right there. 10,915 was the lowest price level that price had gone, and then price went up. Now here's another question. Would you sell here? I'll give you guys 3 seconds for this one. No. No. This is not a place you want to sell. Why? Well, you might argue, hey, this is green. This is meaning that demand might be high. Yeah, this is green, but it's not so high that we think demand is too high. Remember, this is just the 60-minute. The 60-minute is high, but it's not anything crazy. This is fine. A lot of the retail traders have already sold. I know a lot of buying occurred there, but a lot of the retail trader crowd sold there. Right? 41 and 19. Just about equal for selling here. But then in the last 5 minutes for the bigger crowd, 50 Bitcoin were sold. Only 15 were bought. 5 minutes, 20 minutes were about equal. This is not what you're going to see for a market top. If this was a market top and price was not to continue, we would see this like there. What do? We wait. We wait for price to go higher, and then we want to wait for a change in the market. All right, so let's do that. Would you want to sell here? Oh my God, yeah. This looks terrible. So price goes up from here to here. Let me just show you guys that on a chart. Yeah, so that's this right here. This example before, let me just show you that again. This example right there was, that example right there was just that. And then this example is that, right? Price is here in this example. Retail traders have gone berserk with this. 95 Bitcoin bought in 5 minutes by the smaller retail crowd using 639 market orders. 145 bought in the last 20. In the last 5 minutes for the traders with more than 1 Bitcoin, with more capital, 315 Bitcoin bought. 5 Bitcoin sold. 500 Bitcoin bought in the last 20 minutes by the larger crowd. Not much sold. This is a beautiful selling opportunity. And we get a volume spike just to, make it even better. Volume spike, and this looks terrible. As a result, price goes a little bit higher. I'd say, like 0.5%, and then whoosh, crashes. You would have saved yourself from this crash if you had read that. This should be, massive warning signs should be going off in your head when you see this. This is not good. Not good at all. And then, price goes down. All right, so that's just a brief overview into how to use this tool. And I know there's hundreds of ways you can use this site, using this and looking at the distributions from these and looking at the buy-sell heat map and the delta and using these as well, the blue, and especially using this. But I think the best way to use this site is to just pick 1 or 2 indicators and ignore the rest. That way you're not focusing all over the place and you're just focused. 2 pitfalls to watch out for. Watch out when you might see a distribution that looks crazy, like everyone's selling, but if these numbers are small, it's just low volume. I mean, that's not really a good indication of the market about to go up because everyone already sold. I want to see this at like an example like that. 95, 145, 315, 491, or this, 164, 120. That's not this. No. These numbers are way smaller than those numbers before. So we needed to see a lot of volume being transacted to actually trust that data to act on it. I'm not going to act on this data. This is indicating to buy, as I think you can kind of clearly see. The 20, the 5, and the 20 here. This is indicating a buy. The market's likely to go up. But there are more limit sell orders than there are limit buy orders, so I'm not going to buy this. But yeah, you just want to see a lot of volume being transacted here. Also, one more thing is that price usually moves in waves of overbought, oversold. Price can also break out though. When price breaks out, you might see readings like that are just everyone's buying. That's actually a knot. not a great spot to sell because when price breaks above resistance, it's a different kind of thing than when price is in a trend. When price breaks above resistance, you're naturally going to see this like very, very high. But the good news is I'd say 95% of the time, when you see this very, very, very high, typically price is going to go up either a little bit more and then go down, or price is going to go down immediately. Because there is a climax of buyers and there is a climax of sellers within the market. And when you reach that amount of buyers where there are no more buyers, price goes down. When you reach that amount where there's just no more sellers, price is going to go up. And that's the reason why I use the trades counter. And the 60-minute can give me a good indication as well, overlaid down to here. So I realized that was another really long video, but I hope you guys got something out of this and how to use at least a part of this. My favorite part is this, but if you use any other part, that's fine as well. Again, the site is tensorcharts.com. It is free currently. And yeah, so I hope you guys enjoyed this video, and if you have any comments, questions, concerns, or anything, leave them below. Thank you for watching.